welcome everyone to another Bellbuoy webinar where we have as our guest speaker today Sally Anderson. Sally Anderson is the General Manager of Ordel Brokers. For those of you who may not have met me, I'm Shannon Moore-Barnes, Managing Director of Bellbuoy. Chantal van Heerden, the other Managing Director, myself and all the Bellbuoy team would like to thank you for taking the time to join us. And we hope that the information provided today assists in improving your understanding of the insurance market and processes involved therein. We will be placing a link to these presentations on the Bellbuoy Facebook page and our website for all to view. And should any scheme want to arrange a consultation with Sally or require additional information, please make contact with your portfolio manager. We will also be taking some polls during the presentation with information relevant to the presentation. Please indicate your answers and the results will display thereafter. Any questions relative to the content of this webinar must please be placed via the chat function, and we will attempt to answer as many of those questions as possible at the end of the presentation. Sally Anderson, our guest speaker today, has been active in the insurance industry for almost 30 years. She is an associate member of the Insurance Institute of South Africa and is currently studying for an MBA at the Nelson Mandela Metropolitan University. Therefore, without any further ado, I'm going to hand over to Sally.
Thanks so much, Shannon. And thanks so much to Bellbuoy for this opportunity to present to you guys today. I know insurance is quite an emotional subject, and many of us feel we are subject to bullies in the insurance industry, and we often feel hard done by how we're treated by the insurance companies. So it's a great opportunity to chat to you guys today, as most of us have felt, maybe not on the sectional title or body corporate side, maybe on the personal side, that, you know, the insurance companies do treat us a little bit unfairly. So I'm just going to share our screen. Well, that says host disabled participant share screen sharing. If you could enable that for me, I can't share my screen.
It is done.
Yeah, sorry about that, guys. There we go. Okay. Right, so I just want to go through the contents of the presentation today. As Shannon introduced me, I'm Sally Anderson. I'm the General Manager at Ordel Brokers. We're just going to go through a brief introduction to insurance. Not going to get technical because we could be here for days. The difference between resultant damage and consequential loss, the trustee's duties relating to COVID-19, claims procedures when dealing with claims with the body corporate and community schemes, and also the insurance market and any new products that have made their way into the insurance market. So basically, what is insurance? What is it that the community schemes have? It is a contract between the community schemes and the insurance company. There are two parts to your contract. It is a policy schedule, what is covered, and your policy wording, what it is covered for. So, you know, when you open up your documents from the insurance company, your policy schedule will say exactly what is covered on the policy, and then your policy wording is what exactly it is covered for. There are two main areas of conflict or misunderstanding when it comes to insurance and the community schemes. One of the main areas, sorry, I'm not being able to do this because I got a poll up here. One of the main areas is the cause of loss. So the cause of loss must always be a sudden and unforeseen event or happening. And this is the crux of the sectional title insurance. Sectional title insurance doesn't cover maintenance issues. It doesn't cover issues that have happened over a period of time or gradual deterioration, anything to do with wear and tear or maintenance related. It's not a maintenance contract, unfortunately, it's an insurance contract. So any unforeseen and sudden loss is generally covered by insurance policy. Another common area of conflict are geysers. Geysers must be SANS compliant and they must be maintained regularly. And I think most of us are not even aware that we can maintain our geysers. Most geysers have an anoid that needs to be replaced regularly. Close that. And we need to maintain our geysers for our cover to be effective and for there to be no problems when it comes to claiming for your geysers. Now, when we say our geysers must be SANS compliant, geysers must have a drip tray installed. They must have pressure valves that switched off if there's a problem with the geyser. And they must have a date and a maintenance time on there when the geyser was installed. And most geysers have got a little plaque installed on them where you can actually see the date when your geyser was installed. If there's any questions that you have relating to this afterwards, please, we can address these, as it's not a well-known fact that, you know, we can actually maintain our geysers regularly. So the premiums that are charged for are reflective of the cover that the insurance companies are willing to give us. Nothing more, nothing less. So an insurance company presents the contract to the client and says, this is what we're prepared to cover you for, and these are the premiums that we want to charge you. Now, the premiums aren't just sucked out of the sky. There's actuaries that go and calculate and present to the insurance companies what the premium would have to be for your client to pay to cover these losses. They don't offer anything more or anything less than what is offered in the policy wording. We can actually offer options, like we can have a higher excess for a low premium. You can exclude some covers, like your geyser cover. You can actually exclude it from your policy, which will bring your premiums down substantially. But what is offered in the policy contract is what the premium is being charged for. So here's another quite contentious issue when we deal with the body corporate claims, is the difference between resultant damage and consequential loss damage. Resultant damage is a direct result of damage caused by an insured event. So if I can give you an example, your geyser burst and the water flooded the unit. So the damage that the water caused is a direct result of your geyser bursting, and that is covered under your insurance policy. There we go. So the water damage is as a direct result of the burst geyser. There was no influencing factors that came into effect afterwards. It happened directly after the geyser was burst. So your consequential loss is not a direct loss. It's a consequence of the damage that was caused. In other words, an indirect loss. So this poor businessman he was nearly going to board his plane to attend a conference, and his geyser burst and caused a lot of damage to his ceilings and to his home, and he couldn't attend his important conference, which cost him cancellation fees and lost airfares. So those cancellation fees are considered consequential loss. It's not a direct cost of the geyser bursting, it is an indirect cost. Under sectional title policy, consequential loss is excluded. It is not covered at all, other than for loss of rent or the cost of alternative accommodation should a unit be uninhabitable following a loss. So if you have a fire in your unit and it is uninhabitable, your insurance policy will cover the cost of reasonable alternative accommodation while that unit is restored to where it is habitable. If you have tenants in your unit and they no longer can occupy your unit so that you're going to lose rental income, that loss of rent will also be covered that your tenant was paying you for. So that's the only consequential loss that your policy is extended to cover under your community schemes insurance policy. So here comes our subject that we've been put into insurance due to the circumstances that are happening worldwide. We get a lot of questions from the trustees as to their duties relating to COVID-19 and the liabilities. So one fact that CSOS has issued directives to all the community schemes on the regulations that they must follow. So the community schemes must comply with the regulations as gazetted by the government, which I know most of the schemes have jumped on board. They've got their masks, they've got their sanitizers, they've got their guests registered that sign in. So as long as your trustees are aware of their responsibilities, and if anything happens, and they are complying with all the regulations that are required, your trustees' liability policy will cover you for approaches by third parties for COVID-related matters within the body corporate. So they can say that the body corporate was negligent in that they let someone with COVID onto the premises, and your policy will defend this as long as the community schemes have complied with all the regulations that have been gazetted. So we've also had another question come up, is what happens if we have a positive COVID-19 case living in the body corporate, living on the premises? And that's quite a difficult question to answer, because the person that has been tested positive for COVID-19 doesn't need to disclose their status. They only need to disclose their status to the people they've been in direct contact with. And by direct contact means within 2 meters of someone, living with someone. And that might not necessarily be people living within the community. So it's quite a balance to protect the privacy of that person, because POPI protects them, and also to protect the people living within the community scheme. So if you find out someone in your scheme has tested positive, it is the trustee's duty to protect that information and not to panic and send out like a general communication saying so-and-so in unit so-and-so has tested positive. That we can't do that. We're not allowed to do that. But if you feel that this person is not self-isolating, that this person is maybe putting other people within the scheme at risk, it is then your duty to report this, and it's a police matter. You need to report that to the police, or you need to report it to the COVID-19 hotline, which the government has set up, and they will take appropriate action. We actually did hear of a case in Cape Town of a community scheme that this poor lady had to go into self-isolation. She did test positive, and she was just having medicine dropped off outside her door. She didn't even open up her door. And a neighbor phoned the police and said they felt threatened by the fact that this woman is positive next door and they're putting everybody at risk. And that's not fair. You know, we have to balance her rights and the right of the body corporate. But you may get people who refuse to self-isolate and put everybody at risk. And then, as I said, it is a police matter. You need to contact the police. So another issue that comes up quite often is disclaimer boards. And I know in Bellbuoy's webinar last week, Craig Jessup touched on disclaimer boards as well, about how effective they are. And the insurance companies do insist that the body corporates put up these disclaimer boards on their premises. And that is just to make people aware of their rights as well as the body corporate's rights. And in today's times of social media and you know how fast news travels, and everybody's well aware of their rights today, far more so than they were 10 years ago. Disclaimer boards are effective in that, but a body corporate can never contract out of liability. They can never say, but we put a disclaimer board up there so we are protected, or you signed an indemnity form when you entered our premises so we are protected. If the body corporate is negligent in their duties or has not performed how they should have performed, then disclaimer boards won't protect you. But they are good to have up just to make the public aware that you need to be responsible when you enter our premises and take responsibility for your possessions while you're on our premises. So I've also been asked to touch on some of the claims procedures when one of your unit owners has a claim within the body corporate. What documents are required? We always require a signed claim form. During COVID, during the lockdown, the insurance companies were a little lenient with the actual physical signatures of the claim form because a lot of people couldn't get to their computers and printers to actually print and sign documents. So we were lenient. But now that most of the market has opened up, it seems to be business back to normal. But we still can, if you do have an owner that is struggling to actually physically sign a claim form, we can always be sympathetic to that person and submit the claim without a signed claim form. But the rule of thumb is we always need a signed claim form. Then, how many quotes are needed? This is also quite a emotional, if I can call it that. We struggle to get quotes in Port Elizabeth. Our service providers out there are not, not so service driven as they might be in the other competitive cities, but we also need 2 quotations. The insurance companies state that we need to be able to compare one quotation to another quotation. If you were doing work for yourselves, you'd want 2 quotations so you could compare them. Sometimes it's not always possible.
William, it looks
damage
like Sally is back. Okay.
Sorry, did you lose me for a second?
Sorry, Sally, we did lose you for a second there, yes. But carry on, thank you.
So if there is any machinery or equipment that's damaged, then we would need a damage report as well, saying what caused the damage. It's no use just saying the gate motor stopped working. We need to know why it stopped working so we can decide, the insurance company can decide if it was a wear and tear or maintenance issue, or if it was actually a claimable issue. When does an assessor get appointed? So assessors assist the insurance companies because the insurance companies can't go out and inspect the damage and see what happened, and also maybe negotiate better prices with the service providers. So the insurance companies ask the assessors to go inspect the loss on their behalf. It depends, and different insurance companies have different limits where they say, okay, anything under 20,000 we won't appoint an assessor. Some companies have over 10,000, they'll appoint an assessor. Some companies say, well, this looks like a maintenance related claim, so we're going to ask an assessor just to go have a look for us. So there's no set rule when can we expect an assessor to get appointed, but it's usually if the claim is over 10 to 15,000 rand, that the insurance company will send an assessor out to inspect the loss. And the assessor is impartial. I promise you he is. He's not working for the insurance company. He's got your interests as well when he comes to inspect the loss, and he knows the insurance contract and what cover is available under the insurance contract. So as brokers, we are continually sourcing the market for the best covers, the best rates, and that we can offer you, our clients. And you'll see at renewal, we often give you a comparative quote from the insurance companies and the usual players, which names you will recognize on the screen. And those insurance companies are constantly upscaling their own products, where this one will increase that limit and this one will increase that limit, and they're all, constantly trying to have the best product, which is great for us. It's competition, a healthy competition. But then we do get new players every now and again entering the section or the community scheme market, and I'd like to take this opportunity to introduce to you new player in the sectional title market. They're not a new player on the insurance market. In fact, Lombard have been around for over 30 years, but they have launched a new community scheme insurance policy in June 2020. So those of you who have received your renewal notices, you might start seeing the name Lombard mentioned on your renewal letters and wonder who they are. So I thought I'd take this opportunity to introduce Lombard to you, so that you just know a little bit about them when you see that we are actually offering their quotations as well. And if you can just bear with me, I just need to start a little clip of about 3 minutes, just introducing Lombard to you. I missed.
Lombard's roots stretch from 1990, when George Lombard had a vision of offering insightful specialist knowledge over just another insurance product, and so began a small, focused business of writing insurance guarantees to the construction sector. 9 years later, with a solid foundation in construction guarantees, Lombard saw the opportunity to transfer this expertise into other commercial markets and established a logistics guarantee offering. Lombard also expanded into the trade credit insurance space, again with the same philosophy of focus and specialist knowledge. By 2001, the business had doubled in size and continued to make a significant impact in the market with year-on-year sustained growth. In 2007, Lombard took another bold leap and started up our partnerships division, partnering with like-minded specialist UMAs with a passion for and deep insight in their fields of play. Soon after, this saw expansions into mining rehabilitation guarantees and trade finance solutions. 19 years after building a strong short-term insurance business, Lombard hit a people century and took the next leap, acquiring a life license. Our journey over the next 10 years was, as one would expect, full of change. Farewell to some businesses, countered with new businesses and products emerging. 9 UMA partners of exception, covering engineering, PI and liability, marine and transportation, commercial crime, personal accident and travel, commercial property, motor fleet, medical expense shortfall and motor warranties. And expansion into fuel, renewable energy and specialist guarantees. Increasing economic and political challenges have meant working smarter and have created a market hungry for solutions, not just products, something we've been building since our inception. We start the new decade, 30 years wiser and physically in a new space. Our new offices are filled with light and inspiring views across the bustling Joburg landscape. But as much as things change, the more they stay the same. We believe our continued success comes from helping you and your business succeed. We still believe that people remain key to our success. Having the right skills, knowledge, and ability to build insight is what sets us apart. But more than that, it's our philosophy that people are the difference. Our own, our partners, our clients, and our associates. It's people who build valuable relationships, see opportunities and create insurance solutions differently to answer today's challenges that shape success. While our roots are firmly planted in South Africa, we have a global reach, epitomizing the entrepreneurial spirit of our shareholders, whose vision is to build scalable, global business models with shared learning from each region's in-country expertise. As a broader group, we operate across 3 continents with Lombard Insurance Company Limited in South Africa, Correlation Risk Partners in the UK, Nordic Guarantee in Northern Europe, and Asset Insure in Australia. We have a presence in 12 countries, interests in 7 insurance licenses, and in 40 companies across the insurance, niche credit, and insurtech markets. Our future success relies on the strength of the sum of our parts, our ability to grow big by staying small, having real expertise in our chosen fields, diversifying our risk base, supporting each other in uncertain times, and continuing to be vested in the industries and communities we are part of.
So we're always excited when there is a new product on the market because, you know, the new products always tend to aim for for market share and offer better covers, wider covers, and increased extension. So you will be seeing in your letters from Ordel Brokers the product offering from Lombard, should their quotation have been competitive that we receive from them. And I just thought it pertinent that we introduce to you the name Lombard. As I said, it would be relatively unknown to you, but it's known to us in the insurance market, and their new product launched in June 2020. So we will be able to offer you the comparisons of their product compared to the product that you will currently have. And if it is favorable, we could look at the option of insuring through Lombard. I have got every confidence in them as a company. Their claims paying ability is strong. All insurance companies are highly regulated today, so you're not going to have the IGIs or the AA mutuals that went bankrupt years ago. That won't happen in the insurance market anymore due to the solvency ratios that are required of the insurance companies. So on that note, I would just like to encourage you to place any questions. If you do have more questions that you'd like to address with us after this webinar, please contact your PM. We are always available to you. We would love to meet you. Unfortunately, it will be through Zoom at this stage until things settle down in the country. But we are here and available to address any concerns that you have. And you can always set that up through your PM, through Bellbuoy, and we can set up a meeting. So I'd like to invite you to put any questions that you have that we can hopefully answer them for you.
Okay, thank
Thanks,
you. Thank you, Sally. Yes, everyone, please take this opportunity now to place your questions on the chat function, and we will go through as many as we can. I have a question already. It's can the trustees inspect the loss suffered by a unit owner before the insurer proceeds with the claim? I know that this is obviously a contentious subject. Sometimes trustees feel that the insurance policy might be abused, so they do want to check whether the claim is valid themselves. Can you just put some recommendations to them?
So that has always been a contentious issue where the trustees might feel that it's not a valid insurance claim. And one of the reasons that the trustees would feel that they have the right to inspect is that they're looking after the owner's best interests. And it is in the owner's best interest that the insurance claims ratio on the policy remains reasonable. So there's no increases in premiums, or if we do reach a stage where they actually can't place the cover for the body corporate because of the claims that have now started getting out of hand. It's not an easy answer because the owner has a right to be treated as the client, and he has a right to submit his claim. And I would like to assure the trustees that if it's not a claim, the insurance company is going to establish that it's not a claim. And no insurance company is going to want to pay a claim that is not a valid claim. But unfortunately, the insurance company, I cannot tell you as the trustees, you have the right to go inspect it. It is something that needs to be decided in your management meetings with your managing agent on what the rules of your body corporate are. And if it's something that is acceptable, and I know you would have to pass it through CSOS as well, if it's something that's reasonable and acceptable, then it could be a rule of the body corporate that the trustees have the right to inspect a loss. And there should be no reason why you can't. But I can't sit here and say, yes, you can, or no, you can't. It must be a rule of the body corporate. And as from an insurance perspective, the actual unit owner is our client as well. And he has the right to submit any claim that he wants to submit. And again, I assure you that if it's possibly not a claim, it might be maintenance related, or it might be inflated, the insurance company will pick this up. Also, we have had incidences where we've been advised of maybe of inflated or fraudulent claim, and we treat that with absolute confidentiality, and we do, you know, pass it on to the insurance companies and they can investigate accordingly. I hope that answers your question. It's not an easy question.
No, it's never easy. But I think I'm going to move on. There's quite a few queries being placed with regards to geysers. I'm going to try and group them. I know it was quite interesting, the poll results are saying that most people would prefer higher excesses and lower premiums. And obviously geysers are always a dramatic effect on your premium. There's, you know, opinions whether geysers are should be more maintenance related, but in terms of short-term insurance, specifically in community schemes, it's always been a product that the insurers offer, and it does result in, and generally it's geysers that result in the majority of the high claims in schemes. The questions that we're getting here are solar panels automatically included, or do they have to be specified?
So
yeah, okay, answer that first, I think, Sally.
yeah, so if I can just chat about geysers, in that geysers amount to about 60 to 70% of claims submitted under the community schemes. We often laugh about this in the insurance industry. Whoever started this geyser cover did not know what they were doing, because geysers should be treated as a maintenance item in your household, that they only have a lifespan of about 7 to 10 years. But be that as it may, the body corporates have that cover. You can opt not to have that cover, which will reduce your premium substantially, and you can opt to have an increased excess. And we've had in the past where we've had increased excesses on the geysers, but the owners have been desperately unhappy. So as trustees, I'm sure, you know, you want the higher excess for the lower premiums, but you need to be sure that the owners of all the units are also happy with that, because ultimately they're the ones that are going to be paying the excesses, the increased excesses. And it does keep your claims lower, which means your premiums will be lower too. So on the issue of solar panels, yes, your solar panels are automatically included as a fixture of your building. I've always said to owners that say, well, what exactly is covered under our body corporate policy, under our buildings policy? And I said, if you pick up your unit and turn it upside down, everything that falls is not covered. That's deemed as contents. Anything that stays fixed is deemed under the building. So your solar panels are fixed to your building, and they are covered under automatically covered under your insurance policy, your community schemes insurance policy. They don't need to be specified.
And I know we did address briefly that members must always maintain their geysers and there's anodes. And the question here is will the insurer cover maintenance for the anodes?
So geysers are the only item under your insurance policy where they will not penalize you if it's maintenance related, because a geyser bursting is mostly maintenance related. They're reaching the end of their life cycle, they burst, they overflow. There's no specific condition in your policy wording to say you must service your anode every 2 years for the cover to be effective. And let's face it, most of us don't even know that we need to service our anodes and need to replace our anodes every 2 or 3 years. That just expands just increases the lifespan of your geyser. So no, your claim won't be prejudiced if you don't service your anode. It just would assist in preventing a geyser claim and keeping your loss ratio low. And I know some complexes actually have a plumber that come around every 2 to 3 years and inspect the anodes and replace them where necessary. And they negotiate a special rate. And that has assisted in keeping the burst geyser claims in that particular complex as low as possible. It definitely has assisted, but there is no condition on the policy to say you have to do it.
Okay, but the policy does cover maintenance in certain instances if it's requested. Am I correct?
Yes. Well, it automatically covers the maintenance for geysers.
Okay.
So you don't need to request it. It's automatically covered for geysers.
Okay. Okay, and then I know that there's been a question placed on whether, and it's very similar to what you've just said, in some complexes will arrange for plumbers and then they go around and get beneficial rates to replace the anodes. The question is whether this self-sacrificing anode should be replaced by increasing the owners' annual levies. But obviously, we must just say, in terms of the sectional title legislation, hot water installations are owners' responsibilities. It's made very clear. So the trustees cannot raise levies for something that is not their responsibility. So yeah, in that respect, I presume, Sally, what you're referring to when you say something like that is then at the beneficial rates, and those different owners would be paying for that.
Yes, absolutely. The owners are charged individually, but as a collective group, they get a better rate. But it's not included in the levies at all. The owners are charged for that.
Yeah, and it doesn't matter where that hot water is installed, whether it's in the private property of the section or the common property. The legislation deals with that. No matter where it's installed, it is still the members' responsibility and not that of the body corporate. Okay, but it still is covered under the insurance.
Yes.
Okay, I'm going to move on to a few questions we are getting with regards to COVID-19 and obviously liability in queries in regards to this. I know that there's a owner said here he believes that where an owner tests positive for COVID, they must notify the compliance officer. Now, you know, obviously this is in terms of workplace plans and things. Compliance officers need to be can everyone please correct me if I'm wrong here, but if you employ more than 10 employees, I think you are obligated to have the compliance officers and the workplace plans, but it is recommended anyway, even if you have less. So Chantal, maybe you can also come in here, but how do you, how would you deal with that query? And then the other query, obviously, with COVID is also, if the trustees prevent access to the scheme to an occupier lawfully approved by the owner, will the insurer cover a liability claim? To clarify, the above question relates to access restricted by the trustees during the lockdown regulations. So the trustees restrict access to someone who is lawfully entitled to attend. Will there's a liability claim against the trustees? Would the insurer consider this?
The trustees can only lawfully restrict access according to the law. So the law says we are not allowed to have family visiting us. We're not allowed to have visitors, but we must still have access to emergency services. So if the trustees are restricting your family visiting, which I know in a lot of complexes they are just abiding by what is gazetted as law, in that they're not allowing visitors, but they cannot restrict emergency services, access for emergency services. And we can take suppliers, like if your geyser bursts or you need to replace your gas, otherwise you've got no gas in your home and you've got a supplier that supplies your gas. So it's got to be a reasonable restriction. And you can't not allow your owners to have access to the services that they require. But yes, if you,
I agree with that. But say that that has happened and there is a liability claim, would the insurers consider that claim?
So your policy will defend that for you on your behalf. So if you have an action brought about the trustee saying that, you've restricted the access and we are now suing you, your insurance policy absolutely will defend that on your behalf. So they'll pay the legal fees. They've got the experts to handle the claim. They will enter into litigation with whoever is suing you. So yes, absolutely. It might not be a valid claim against the trustees because it's not applicable, but the insurance policy will defend it for you and enter into any litigations. So you will be covered from that point of view. And they will go to court for you on your behalf to say you were well within your legal rights to restrict Joe Soap coming to visit his aunt in the complex. And so it's reasonable. It's government has told us this is what we're not allowed to do, and any trustees trying to uphold that, if you have any action against you, then your insurance policy will defend that under your liability section. Yes.
Okay, so thank you. And then I think just with regards to that the query with regards to reporting, an owner has to report if they have COVID to the compliance officer. As I understand, the reporting would have to be if an employee of the scheme has COVID, it has to be reported to the compliance officer,
Owners. Yeah.
not owners. But
No.
that is my understanding. Chantal, would you agree with that?
Yeah, and I agree with that. It's relevant to employees of the scheme, not occupiers of the scheme.
Okay, thank you. Well, that is all the questions that have been placed by attendees. So if there's no further questions, I'm just going to then thank Sally very much for taking the time to present to us. And again, this presentation has been recorded and it will be sent to all parties involved, and it will also be on our Facebook page. We will send everyone the link. So yeah, I think that is, if there's nothing further to add, thank you very much for taking the time and joining Bellbuoy with this webinar.
Thanks, everybody. Thanks for the opportunity.
Thanks,
Pleasure.
Sally.
Thank you.